We are back on Morning Movers. Applied Materials set to report earnings after the closing bell today. Analysts are expecting EPS to come in at $2.34 per share on an adjusted basis. Revenue expected to come in at $7.2 billion. The semiconductor systems manufacturer is up more than 50% off April lows. It's gained some 16% year to date. Time now for Options Corner. Joining us to take a deeper look at AMAT is Rick Ducat, lead market technician here on Schwab Network. All right, Rick, what trends do you notice about this chart?
Well, the most obvious thing is it's notably underperforming both the S&P, the broader sector, and the semiconductor and tech sectors as well. Here you can see AMAT is actually down during the previous year during a time of pretty strong gains. And to me, this highlights the very stark differences in the semiconductor sector. You've got the chip makers and the memory companies, AMD and Micron, companies like that doing really well. The ancillary companies, Monolithic, Skyworks, AMAT, these are the ones that kind of make stuff for the industry, are languishing a little bit. Then solar companies like Enphase are getting crushed. And to me, this is the legislative risk of the entire situation. This is a sector that's an extreme focus, so things could change drastically. But when we look at AMAT's chart more specifically, we can see we had a couple of important bounces here. These supportive levels here where price solidified near our moving averages in our volume node, 175, 185. Those two levels really stick out here. And then to the upside, that 200 mark, our red line there showing all the way back here was a gap, a high point, and another high point here. If we were to consider this, we can also see our expected move August 15th, a 5.3% move upside or downside in only a few days. This would capture that earnings event that we do have coming up after today's close. An interesting kind of pick and shovel play here because it's equipment for the industry, so it could be an insight into how everything is faring.
All right, thank you, Rick. Now to take us through an example trade, we've got Tom White, senior options contributor and co-host of Fast Market. All right, so Tom, what would be the approach for an example trade for AMAT, given they've got earnings coming up? So year to date, it's had some outperformance, but on a year-over-year basis, Rick points out the underperformance. So what's the approach for an example trade?
Yeah, you take a look at that all-time high of above $255 per share last July. So 13 months ago, this thing's pulled back about 25%. So it has been lagging. Implied move for the stock based on the option market, as Rick mentioned, just over 5% on this one, plus or minus nearly $10 either way. That's actually quite low on a $190 stock here. So I looked at a strategy that takes advantage of that lower implied volatility going into this report, because typically when we have event risk like earnings, we typically see implied volatility levels go up. They don't have a big share float either, so I took that into consideration. So I looked at something, need a move type strategy here, where I'm going to buy an iron condor. I went out to the August 15th monthly options that expire in just one day, so really short-term positioning. I'm going to buy an out-of-the-money call vertical. I'm going to buy the 200 strike call, sell the 205 strike call. And then on the put side, I'm going to buy the 182.5 strike put and sell the 177.5 strike put. So a long $5 wide, need a move type of iron condor, where I'm going to pay roughly a $2 debit. That's going to be my risk, $200 per spread. And you can see here from the risk profile, I'm going to lose money between 182.5 and 200, right? I'll lose what I pay for this type of strategy. But this one, you take a look at and you go, hey, what if it moves 2 standard deviations or 3 standard deviations? An outsized move. We've seen a lot of those in earnings season. This takes advantage of it. Your break-evens, just above 180 on the downside. You want it to go either below there or above 202 to the upside for max profitability. So you got a pretty good risk-reward setup on this one. If you do get that outsized move, you got really limited time, so you got to take that into consideration. But this is playing for maybe muted implied volatility levels here that you can take advantage of if you think the stock is going to move more than that 1 standard deviation.
All right, that's an example trade there for AMAT. Iron Condor is the approach. Thank you, Tom.
Thanks.